This is my Million Kronor portfolio going into next year. I will talk briefly about each and every one of the larger holdings and why they are in my portfolio going forward. But first, I just wanted to address that since last time going over the portfolio, you can see that there is no Huang LNG. Well, they were bought out by the mother company and liquidated and left a large cash position in the portfolio, but I've been able to fill up on companies right now at very cheap prices, so happy about that. Not super happy about having to take profits early though, as it was a very nice run and I believed it could have continued even higher. Going into next year, I have a Porch Group here. This company I bought due to the high confidence of management. Matt Ehrlichman, the CEO there, bought a lot of shares. And when I looked at financials, I saw that they had great revenue growth. They were not yet profitable, so it's a bit of a gamble. But when looking closer at the company, with the number of employees that they have, they can just cut some of those and they can flip a switch and become profitable. So I don't see a lot of risk there, at least as not as much as the market has priced into this company. And I think that they have a lot of potential to make me a lot of money. And I love making money, and I hope you do too. Secondly, we have StoneCo here. There's not been a lot of action in StoneCo since I bought them. They've been going basically sideways for a long time, with a lot of market uncertainty in Brazil, where they operate as a payment processor. They had some issues in the loan division, but it does not take a genius to understand that card payment processing will just grow in Brazil. They use cash a lot, and once they discover how easy it is to use credit or debit cards, well, then a lot of the smaller merchants will get in on this trend. It will grow just like it did in the West. That is my prediction for this company, this sector that they are in. And as a financial payment processing companies, they can just take a cut of this growing market. And I think that they have a very bright future ahead of them. Then on the third place here, we have Bauch Health Companies. This company is known for their products for the eyes, for lenses, and the liquid that you put on your lenses. Basically, a very common product that is in a lot of households today, as we sit a lot in front of the computer. They are valued very lowly. This is purely an asset play, as the holding company here, Bauch and Health Companies, is the one who's owning Bauch and Lomb. So the potential here to spin off a company that they're holding that on paper is worth about double of Bauch and Health Companies is huge, and Bauch and Health Companies owns it's about 90% of Bauch and Lomb. So it's a bit complicated. You have to do some, we call it in accounting, we call it concern accounting, when you look at the whole structure of companies that they own. I'm glad I don't have to do this on Samsung, that would be a mess. But this one was a bit easier to look at the ownership structure and see that, Jesus Christ, this company trading for, I think it was 3 billion market cap, and they have a 6 billion market cap company, something like this, and it's just the VMware spin-off from Dell all over again. And then on fourth place here in size, we have Vitrolife. They're doing the IVF components for fertility clinics. So all around the world, well, this small Swedish company is selling the products needed to make the IVF treatment successful. And they're growing tremendously fast. They're profitable. They don't dilute shares. And when they dipped massively, I bought into this company because I believe they have a very bright future. I think that this IVF treatment stuff will be part of company plans for a lot of big companies now and in the future. And the success rate for treatments is not 100% guaranteed. Maybe the women have to do 3 or 4 of those. It costs a lot of money. I've heard on lunch breaks people talk about how costly this is. And when I researched this stock, indeed, it's growing fast, it's very profitable, and the demand seems to be there indeed. Then we have Palantir. I actually applied to a job on them very long time ago, didn't get it, but this is one of my higher conviction stocks since working in the IT sector, seeing how siloed things are. And they've gone down a lot since I bought them, so this has been a unsuccessful investment for me so far. But given how ERPs are not able to solve all the problems that companies have today and the vulnerabilities that we discovered in the supply chain in the midst of the beer virus pandemic here, I think that this company has potential to be a big player in the business to business space. We've just seen how tremendously successful companies like Oracle can be, and indeed there's a lot of potential for Palantir. In terms of valuation, price to sales, they're valued very low right now, and it will be interesting to see if they can continue to do. I shouldn't say continue. They haven't done good growth. I was hoping for 40%, but they're basically slugging around at 20% year-on-year growth. And yeah, this investment has been a dud so far. We will see how the future goes. I'll continue to cover them. Maybe I will drop them out of my portfolio if they don't deliver. But as for now, I'm waiting, I'm sticking to my strategy, sticking to the core belief of the business being good. Although in terms of looking back and having 2020 hindsight, the valuation was a bit high when I bought in. Then we have Foot Locker. Foot Locker increased a lot since I bought them. I haven't really added anything new to the position. They're paying dividends, and in terms of the price I paid to get them, I think that it is great dividends right now. This is a dividends play. The market was really worried about them not getting enough Nike shoes when I bought, and I was thinking to myself, in terms of price to earnings, the price level that they're trading at is just insane. The market is clearly overreacting, and they rebounded really nicely since then. Then we also have Africa Oil here, operating in, of course, Africa. They're doing offshore platforms for oil. There's a lot of potential in the stock right now, as they might have found the biggest offshore oil source in the world, even bigger than the currently biggest one, who's off the coast of South America. And we don't know this yet, but in terms of profitability, they've been absolutely going ham. They've been doing great with oil prices going higher, and I think that this company will pay some nice dividends in the future, as there is no use to invest in further exploration due to the current political climate, and energy will be expensive for the short term. So some great potential in this stock, and if they find a large quantity of oil, well, then that's a bonus. So there's a bit of a gambling element in this stock as well. Then after Africa Oil, we have Oscar Properties. The property sector right now is being absolutely hammered on the stock market. Oscar Properties used to be a construction company. They used to make the properties, but they have had some bad history there, and they have a very bad reputation, and the stock just tanked. They were under investigation, and I believe that there's potential for a turnaround case. They've changed the business model, so right now they're managing properties, not building them. So they're basically a traditional real estate company in that sense today, and right now they're trading at 1 something price to earnings. But of course, there's high risk here. The market is worried about interest rates going up, But in terms of how much debt they have the standard ratio that companies in Sweden have. They have about 1/3 in equity and 2/3 in debt. So in terms of debt to equity, quite standard ratio, nothing fancy. But the bad reputation and the market being really scared has made this company trade extremely cheaply, just like the whole sector basically. And then of course we have some other companies that I'm following along on to cover and see and potentially buy more into. What we're not seeing here is the saldo that I have on my normal bank account. That's just a lot of dry powder ready to be deployed if I find any great opportunities. But this has been a quick summary of my portfolio going into next year, why I have the companies that I have there. So it will be interesting to see. Hopefully I'll make a ton of money going forward. And just to end the video, I hope you make a ton of money as well, whatever investments you decide to make. Take care now. Bye bye.